Rob Stone, 2 damn phones, Babylons can't crack the code.
Welcome to B-MoneyTrading. Back again, doing a quick video. I took some new positions, but we're gonna go ahead and start off with just where we're at. For starters, the market had a very bad day today, had a major sell-off, and we can see here, it looked like it hit this support and bounced off of it, and it's just kind of chilling above it. We'll see. I was waiting to see if it broke the 270. I did start taking positions, and some I bought in around mid-morning, around 10 or so, and then towards the end of the day, I wasn't down very much in them. The ones that I ended up being down in were positions I already had, and so I ended up adding to them towards the end of the day, considering that we came back down to this support level. And market's closed tomorrow because of shutdown for George Bush, the death of one of our presidents, and it's a day of mourning. And I'm guessing this is a first for me, but I guess this is traditional of what they do whenever there is a president, an ex-president that passes away, is they have a day that they shut the markets down for mourning out of respect and I guess admiration for him and his family and all that he'd done for the country. So I know a lot of people are bummed out about it, but I think partly the market selling off today is, I think, some people say, well, and politically, like nothing, or with the trade deal, that nothing was ever actually agreed upon, so it really was just like smoke and mirrors, and that's why we had the sell-off today. For me, I think partly some of that maybe, but as well the fact that the market's going to be closed tomorrow, and there was a lot, you see sell-offs a lot of times right before a holiday, and so even though tomorrow's not an actual holiday, just the fact that the market's going to be closed and people don't want to be holding on to positions. And so we can see though that these support levels and resistant levels have been very accurate as far as what we've been hitting and sticking around. And so with that said, I'm going to go ahead and start in on the positions I accumulated. I'm going to run through them really fast. I'm sure I'll do a video later on in the week, letting you know like where I got in, why I got in, and whatnot. But we'll just go ahead and break them down and call it a night. So I still had CGC. This is one that I'm down quite a bit, over $100, and it's a long-term trade, so not too worried about it. It is making up quite a bit of my portfolio. I have to keep an eye on that. And 12 hours ago I bought 5 shares, so that was earlier today, and then so I accumulated, I bought 5 more shares of that, and I need this thing to hurry up. Apple, I don't think I accumulate any more in this. I still hold in the same position as I have been. Yeah, I didn't add anything to that. I'm down on that trade as well, $56. And also, so you can see where I'm down for the day. Still up for the week, but you can see it did take a pretty good drop. So that's just how it goes, especially when you're swing trading, that you're going to see some pretty good swings. And that's the whole point behind taking small positions and accumulation, is so that you can withstand the volatility, especially with what's going on in the market right now, how volatile it has been. To buy your complete share size, all at once is, especially doing a swing trade, is, to me, is just crazy. It's not very good risk management as well. I still have around 1,300 in buying power after all these positions I took, and I will look to I added to Carvana. I'll look to add some more money possibly tomorrow. I'm not sure. I did good this week, and I still have money left over play money after paying bills and taking care of responsibilities, putting money in savings and whatnot. So I may put some in it, and then as well I'll put some Friday when I get paid after working this past week, 7 days. It'll be a nice check. And so we see here, sorry, my allergies are bothering me. I bought 3 shares 10 hours ago, and my average is 40.56. We're holding at 38.40, down 32 bucks. This trade is making up 15% of my portfolio. Not too bad. I know I try and keep around the 10% area, and it worked out pretty good. I had 10 different stocks I was holding, and then I sold them on the pop on Monday. I sold them 6 of them and held on to 4. The 4 I held on to is CGC, Apple, Carvana, and ACB. And then ACB I added on to this today. And I talked about in the video the other night about taking new positions in certain stocks. So we see I'm down about 60 bucks in this trade, holding 80 shares. And I bought 10 shares at $5.42 a share. And we can see we're at $5.45 right now. This one's taking dive. And go ahead and jump to the next one. BP is a new position I took. And we see I'm down 60 cents in this trade. It's an expensive stock. I got 4 shares, and we can see that, where's it at? Bought 4 shares at 41.35. I believe I accumulated though. I don't know why it's showing that I bought them all 4 at once. I believe I bought them at different times. I don't think I went all in on 4 at once for some reason, and Robinhood has a tendency to mess up on that. I'll have to go back and go more in depth in my account and see what happened there, but I don't believe I bought them all at once. I don't know why I would do that, but anyhow, average price is 41.35 and it's at 41.20, so that's where I'm at on that trade. And then Constellation brand, I've talked about this the other night as well, and I'm holding 3 shares at $194.55 is my average, down 10 bucks. You can see that it's $1.9117, and this one you can see I accumulated, bought 1 share 15 hours ago. I bought 1 share, and then 13 hours ago. So you see there's a 2-hour difference, that I bought another share, and then a 3-hour difference that I bought another share. And so I was just accumulating, and I'll look to see how it performs on Thursday and look to possibly continue to accumulate on these positions. I'm going to try to keep my, I want to keep my portfolio under 10 stocks, closer to like 6 to 8, and then just have each stock make up a little bit bigger portion than 10%. But sometimes just how the trade goes, it doesn't work out that way. And so we see here, average cost is $109.37. This is a JP Morgan Chase, and it had a major sell-off. And we see I got 3 shares, and you see I also accumulated these. I bought 2 14 hours ago, and then I bought another one 10 hours ago. And so, looking just at the earnings and how it's performed over the past few quarters, I expect fourth quarter to be really good. And so this is a stock I believe that's undervalued. And I know there's also talk about Warren Buffett bought it, I guess like a week or so ago, bought a lot of it, and so that also had me kind of interested in it. But I was looking as well at Bank of America, and then just looking at the charts, comparing the two, that I decided to go ahead and go with JP Morgan Chase. But keep in mind, I wasn't just getting in because so and so bought this. Regardless, I wanted to look at the charts and see which financial stock I thought was undervalued more. And so, given the earnings and everything, and how this one has performed, and for how far it's down, I mean, if we look just over the past month, 112, and it's at 107. Past 3 months, 117, and it's at 107. And then the past year, 117, and it's at 107. So it's at a good it seems like support area. The charting on this is crappy, so it's hard to really tell, but I don't want to take up too much time tonight. So we see where that is, and that's basically where I'm holding right now. And if we go ahead and even like so, it's telling me right now my buying power is $1,249.10. So I look to possibly add 200 tomorrow, and then on Friday add another 200. And I'm working hard as well as just trying to get it to grow, and taking positions in good stocks that I believe are undervalued. And it's a very simple strategy. The only deal it comes with is being able to manage risk and technical analysis, and knowing at what point you go ahead and just take a loss on it and keep it small, so that in your next trade, hopefully you'll make it back and profit. Not, and it didn't always work out that way. Luckily, the last trade, Monday, sold, made profit on all the shares that I sold, and on USO, they ended up making a little bit more than what I lost on that trade with I, and so I ended up making a little bit of profit off that one trade and making up that loss for I, and then all the other ones were just straight profit. So, the other video you saw, I was up for the week, 200, and we had this made, and that's just how it goes. And so I'm back in the accumulation phase, and it's very simple. I look for stuff that's undervalued, so bought, and then I end up selling, and then I start accumulating, and so I'm down right now. But if I pull up the SPY real quick, we can see that it hit this price point, this area of interest. I believe a majority of people are looking at to see if it holds. 170 I think is a very important price area for it. After that, we're going to look to go back down to the 266 area. So hopefully we can stay within this range right here from the 281 to the 270, I believe, and I could be completely wrong, but unless some news comes out tomorrow negative, that I believe Thursday when we come back, we'll see the market pick back up and start going back up again, and it'll test the 274 area, and hopefully we're able to break through it like we were here and see something. But I think this is really going to be the range for a little bit, is the 281 to the 270 area. And so I look to accumulate, and I still am keeping money in reserves to continue the accumulation. But once I get so far down, like I said, on ACB, CGC, and Apple, those are long-term trades, so I'm not too concerned with like CGC. I think is the one I'm down the most, and it's like a little over $100, and that's all right. I'm not too concerned about that. And then ACB, I've just been steadily accumulating, as you see on both of these. It wasn't but like last week that I was holding like 15 shares or 12 of CGC, and then I was holding, I don't know, it was like 60 or something of ACB. And so it's just slow accumulation, and that I believe, like I said, on the other trades I was in, when I was down, I told you these will pay out. These, I'm gonna make money off of these. Now, I didn't make money off of I lost money, but then on the other positions, I made money and made more than I lost off of made back that small loss of like 17 something, whatever it was, about 20 bucks. And so basically that's just that simple. Now, it may be boring, but the whole point behind this is that you got these people trying to day trade and having these huge swings in their account, and then within a month or 2 months they've blown it up. And then you see me here, like the tortoise and the hare, the turtle and the rabbit, that I'm just slowly moving along and getting in, picking my entries, picking my exits. It's not this da 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 da, in, out, in, add, scale out, out of it completely. All this chaos. It's just, man, I'm just doing my thing, and you see the account steadily growing, and it's, once I go over the 25K mark, then I can look to do a little bit more of like day trades where I'm in and back out, and still continue to do my swing trading, and have a good stake in the game to be able to really accumulate. And my accumulation phases can be a lot more longer, to where when I do sell, I make much more profit off of it. But right now with a small account, I have to be real careful with how much I buy, when I buy, and that really goes just for overall, regardless of how big or small your account is. But especially the smaller your account is, the more cautious you have to be, and manage your risk that much better. And that's really the catch-22. Being new, you don't know how to do this, and you have a small account being new, but it's that much more important that you know how to do it, versus if you had a big account, then you have a lot more leeway and can let it move on you and not get stomped out of your position. But having a small account, it's more important that you are able to do this, but you don't have the experience to do it, because that's why you have a small account in the first place. So it's one of the catch-22s with being new as a trader, but that's partly why I created this channel, is to kind of help you and keep you from losing money, or at least help you not make dumb mistakes that end up costing you big. Trying to help prevent you from being one of those people that are on Facebook posting to a trading group, I'm in this, I don't know what to do, I'm down X amount, or where do I take profit, or anything like that. That basically you learn your own, like how to develop your own trade ideas, your own entries, how to do your own technical analysis, and how to think for yourself ultimately. That you're not shadow trading, you're not trying to follow somebody's trades, so that when you make money, you made money because you made the decision. So there's a lot of pride and joy in that you were able to accomplish that, versus just following somebody. I'm big on watching other people and their vlogs, their trading vlogs, because you can learn a lot from that. The different types of strategies people have, and styles, and the way they trade. And I know mine is probably not one of the most entertaining ones, but it's the one that makes me money. And I once did a video a few weeks ago that talked about that. Are you here to make money, or are you here to be entertained? If you're just looking for entertainment, you can go down to WinStar or Vegas or Louisiana and hit the casinos. But if you're looking to make money, then you have a strategy and you manage risk above all. And so through risk management, that's how I'm profitable. That's my edge in the market, is the ability to manage risk. And that's one of the things that I hold over these new day traders coming in. And what I take advantage of is the fact that they're going big, and if it doesn't go their way, they have to get out very quickly. And so as it goes down and they're trying to hurry up and get out, I'm the one buying the shares, because I can take such big swings, because I'm taking low share size and diversifying. And that's the whole principle behind it, is that I'm given the ability to do things because I'm swing trading, and with my strategy taking small share size. And even though I'm not making $200, $300 on one trade, I'm also not losing $200, $300 on one trade. I may lose, 20 bucks or 50 bucks on one trade, but overall my trades are paying out, anywhere from, 25 to, 100 something dollars. And so, if you do the numbers, then at that rate, I'm making more than I'm losing over the span of time. And that's the whole thing about having a strategy, is not looking at what is it done for today or this week, but what is it done for the month, 3 months, 6 months, and a year. At the end of the year, where will I be at if I keep trading this way? And I think that's one of the most important things that any new trader needs to ask himself. Is, I understand you get on a losing streak and you have a bad month or so, but sometimes when that happens, you just have to be able to step back and stay out of the market for a little bit and kind of recollect yourself and kind of get back on track with the market and in tune with it and how it's moving. Right now, it's just so volatile that I think there's a lot of opportunity, but I think the majority of the opportunity that's available is for the swing traders and the very experienced day traders. If you're not experienced, I think y'all are the ones losing a lot of money, because right now the market is very indecisive on which way it wants to go. And so if we pull up the SPY, I'm gonna go ahead, I don't want to get on my soapbox, but we'll pull up the SPY real quick. We can see though that basically it's going sideways right now. We can see that the top of the channel, this is the big channel, right? 281, and the bottom of the channel, 262 area. And I'm hoping that we can just stay within this channel right here. And to me, that's really important, that we stay within 270 to 181. I prefer the 274 to 181, but we've already passed through the 274. Once we went through 274, I knew like this is bad. This is definitely bad. And then we pushed through the 180-day EMA, and so this is where we're at now. The only good thing is that it's an opportunity to start accumulating. And if I would filled up my whole account and bought everything at the start this morning, then I'd be down a lot more than what I am now. And so and that's just where experience and risk management come in into play. And it comes with time and screen time, and that's why I tell new traders to take small positions, so that you have the ability to learn before you lose so much money that you just give up before you even really had a chance at being successful. Because it's going to take quite a bit of screen time, and there's no substitute for experience. There's no substitute for screen time. People say paper trade, and yes, I do believe in paper trading as far as learning how to put in orders and which orders work in which way, and learning just how to interact with the tools that you're using. But when it comes to actually trading, it's a totally different game. It's like playing paintball versus going out and actually being in a real war. There's a big difference between getting shot with paintball guns versus with a real gun shot at, and there's just no substitute for it. But it allows you to kind of get a strategy and an understanding of how things move. And so that's where paper trading finds its is necessary. But to brag about how much money you've made paper trading, I wouldn't brag so much about it. Anybody can make oodles of money playing Monopoly, but when it comes down to the real deal, that's when it matters. That's when the hours you worked and everything you've done, you put on the line in hopes to make more money, and you're putting it on the line in hopes that you don't lose it. So anyhow, it's about 25 minutes, and these videos, I always got so much to say and there's just not enough time. I apologize, but these are my experiences, and as my account continues to grow and the channel continues to grow, I'd like to look back at these videos and people look back and see like this is been the real deal process. This isn't like everything's been documented, and they can see that I admit to adding to my account, that that's part of the process of becoming successful and growing a small account. Is not just hoping you put in 1,000 and flip it. It's put in 1,000 and then next week put in 200, and the next week after that put in another 200, and next week, and then if you can do 100, then 100. If you can do 500 a week, that's great, do 500. But that's what it's going to take, is continuing to add. And Because the experience, well, hopefully you have gotten your experience and kept your account small to the point that you proven to yourself that the strategy that you're using, that you have the ability to be consistently profitable. And so then that's when you start beginning to where you start the accumulation and compounding. And so that hopefully by the end of the year, or within 6 months, 9 months, you've made, the goal of being over the 25K mark, and hopefully don't ever have to go back and worry about it, but you just have the freedom that you don't have to worry about the pattern day trading rule, and you don't have to worry about it's one of the things when I take new positions. I know I run a risk if I buy more than 3 different stocks, because if somehow one of those or all those come out with horrible news somehow, and say I bought 6 different stocks and I already had 1 day trade for the week, and 2 of those stocks I just bought started tanking, I'd be able to still, start scaling out or getting out completely, and that would be all good. But if there was a 3rd one that day, I would be stuck. Or later on that week, I take a new position and it tanks on me, and because I mismanaged my risk and position sizing, then I'm stuck in it till the next day. So that's one of the things that I have to watch out for when I'm taking new positions, is not to take too many at once, because what happens, if one position tanks on me and I mismanage my position size, and so I gotta get out of it, or just take some off, and so I sell the same day I bought it. I sell like a quarter of what I bought or whatever to manage my risk, and that's a day trade. And then that happens 2-3 more times that week. Well, the 3rd time I already got 1 day trade, so I can do it 2 more times. But that one after that, it's gonna put me over the PDT rule, and so I'll look at being restricted. And so that's why as I enter in positions, it's important to make sure that I do good position sizing as well. I wanted to take a lot more towards the market close than what I did, because I also have to keep in mind that what if come Thursday the market continues tanking? Like right now, I'm expecting it'll hold this area, the 270, hopefully not drop below it, but if it does, it'll hold the 269 area. But I'm sure a lot of people thought that back here when it just went through it, and after hours and pre-market and opened up down here, that they were like, oh my god, I thought it was gonna hold. So there's no telling. We'll see how it plays out. A lot depends on politics and news come tomorrow, and then numbers. So anyhow, I'm gonna go ahead and wrap it up, call it a night. So I will talk to y'all. I'll try and do a video tomorrow night, and we'll just go from there. So anyhow, thanks for the support, and